Welcome to RANsquawk morning briefing for Wednesday the 14th of October 2009. Quick review of the overnight news where we stand so far in this European morning. Today has been quite busy in general tone. Starting off with what happened at the close on Wall Street yesterday, did see Intel posting numbers that were much better than expected. They beat on both their headline EPS sales and also had a better forecast for their next quarter sales results, and they see a rebound in PC demand. In turn then, Intel shares did move higher after market, and that has buoyed the equity market since the open. Higher open for UK and European bourses, and they pretty much maintained those gains and pushed on the DAX index in Germany, already printing fresh 2009 highs, and seeing tech stocks, the second best performing sector in Europe. Allied to that as well, we've seen the dollar index, as we saw yesterday, still sitting around 14-month lows. So the dollar index continues to slide for the time being. That in turn giving commodities a good lift across the board. WTI crude futures in turn overnight moving back towards the $75 handle, which also marks a fresh 2009 high, as well as spot gold again hitting a fresh record high as well. So allied to the strength in tech stocks, both oil and gas and basic materials outperforming in the Eurozone. A quick recheck in terms of some of the other news that did happen overnight. Saw the Bank of Japan, they had their interest rate decision where they kept rates on hold as expected at 0.1%. Taking a look at some of the other details in that report, the BOJ did not say what it planned to do with its temporary steps to help corporate finance that are due to end in December. It did upgrade though its view on the economy, saying it was recovering, but left its assessment on financial conditions unchanged from last month. Elsewhere as well, we've seen some pretty positive data coming out of China across the board. So China reported surprisingly strong trade figures. Exports in September, although fell 15.2%, it wasn't as deep as analysts were looking for. Imports were also showing signs of slowing in their deterioration. We've seen as well Chinese new loans coming in just over 500 billion yuan, as well as some rumours going around at the moment of stronger Chinese GDP, 9.1% being touted. Analyst consensus currently for that official release on the 22nd of this month stands at 8.9%. Elsewhere as well from the US, from overnight, Fed's Cohn did speak and says doesn't think V-shaped recovery most likely outcome this time. Fed's Cohn says uncertainty on the economy is quite high, recovery may be moderate and strengthen in 2010. Elsewhere, ECB's Nui said the worst of recession is over. That was late yesterday evening. And taking a look on some of the things that we have already seen so far today, chiefly out of the UK market, saw a bit of an improvement in terms of a stabilisation in some of the jobless numbers and improvement in the average earnings in the UK. In turn, we have seen a bit of a boost for the UK banking stocks, in particular in the FTSE 100. They did squeeze hard on the back of those numbers. Elsewhere then, looking at midday, we have the weekly MBA mortgage apps from the US. 1:30 today from the US will be advanced retail sales, although given the fact that cash for clunkers program has now ended, analysts are expecting a bit of a downturn in this month's figures for September. Allied to that, we'll have import price index. We'll have business inventories at 3 o'clock London, so 9 in Chicago, and then the focus will turn to FOMC minutes of the September 23rd meeting. They're due at 7 o'clock London, so that'll be 1 o'clock in Chicago. API crude oil inventory numbers, they're due after the NYMEX pit close as per normal, and we'll be eyeing reverse auction from the UK this afternoon. They're targeting 2013 to Sep 2019. One of the other key market moving events will be the major US banks. The first are due to report today. JP Morgan and Morgan Stanley, they are the first to report. We'll see Goldman's tomorrow and Citigroup on Friday.